China and Pakistan has unanimously adopted India's proposal for developing a digital public infrastructure.
We just launched WhatsApp payments in India last month. That was possible because of the UPI system.
दुनिया में 40% हिस्सेदारी अकेले भारत की है.
That UPI payment for foreign travelers to India will be allowed.
Japan's digital minister and praised Japan's interest in joining India's UPI payment system.
UPI has been a game changer, propelling the digital payments revolution in India.
UPI, Unified Payment Interface, has been quite a revolution already. You can make a payment to a shopkeeper, auto driver, in a restaurant, even in buses. You don't even need a bank details, just a phone number or a QR code will do. Payments happen with a blink of eye. Indians loved it. And over 38 lakh worth of transactions back in July 2016 to over billion worth of payments in May 2023. UPI's rise has been quite a breathtaking. Let's get into a basic and know who came up with the UPI and how does it work. UPI was introduced back in 2016 by the Reserve Bank of India, the National Payment Corporation of India and the National Bank Association. NPCI is the charge of payment system. It makes it easier for banks to talk to each other and move the money around. In this case, how UPI works. For example, during UPI transaction, the money from the sender's bank account is first transferred to the payment app's pooling account or the general ledger, and then it is received on the receiver's bank account. This ecosystem primarily involves 5 entities. On first step, PSPSP, Payment Service Provider, that allows customers to send money via digital transaction. It captures the PIN, biometric, authorization, credential, validation, and sends a payment request to the payee's PSP via UPI. On the second stage, National Payment Corporation of India (NPCI) act as a trusted switch between the banks and the payment service provider. The role of the NPCI is to manage the data flow between the banks and the payment apps and route it to the correct and verified destination. On the third stage, remitter banks. Remitter bank refers to the sender's bank, also known as issuing bank. Upon NPCI's request, it deducts money from the payee's account and sends a response to a NPCI once the debit is successful. And on fourth stage, beneficiary bank. Beneficiary bank refers to the merchant, receiver, payee's bank, otherwise known as acquiring bank. It processes the credit request from the NPCI, credits the money to the payee's account and sends the response to NPCI once the credit is completed. Finally, payee's PSP. Upon receiving the request, the payee's PSP acts as a beneficiary PSP and provides the account details against the virtual address credit request. It validates the payee details and sends the response to the UPI to receive the funds from the payer. That's it about how UPI works. Let's dive further on significant growth of UPI transaction in India and its key statistics. Since its launch in 2016, the popularity of UPI in India has been steadily growing. According to the recent report titled Indian Digital Payment Report by Worldline, India witnessed 20.57 billion online transactions. These online transactions encompass debit and credit cards, prepaid payment instruments like mobile wallets and prepaid cards, as well as UPI, which includes person-to-merchant and person-to-person transaction. RBI data indicates that UPI transaction reached a total of 139.2 trillion in Indian rupees in financial year 2022 to 2023, accounting for around 73% of all non-cash transactions in India during 2022. According to the report by PwC, it is projected that daily UPI transaction will reach 1 billion by financial year 2026 and 2027, representing approximately 90% of all non-cash transactions. In April 2023, UPI transaction reached INR 8.9 billion with a total transaction value of INR 14.07 trillion. This indicates a 59% increase in UPI transaction compared to the April 2022 and a 49% growth in transaction value from previous year. Furthermore, NPCI data reveals that approximately 74 billion UPI transactions worth INR 125.94 trillion were conducted in their calendar year 2022. This signifies the nearly 90% of growth in transaction and a 76% increase in average transaction value compared to the previous year. December 2022 witnessed the record-breaking 7.82 billion UPI transactions amounting to INR 12.82 trillion. That shows how Indian digital payments are growing. Let us try to understand how non-residential Indian holding NRE or NRO accounts with international mobile numbers allowed to transact on UPI platform. As per January 10, 2023 circular from NPCI, UPI platforms will be able to onboard NRIs, account holders holding NRE and NRO accounts from 10 countries with international mobile number. If they satisfy the certain condition, NRIs use NRE accounts to transfer the foreign earnings to India, while NRO accounts helps them to manage their income earned in India. Their banks must ensure that NRE or NRO accounts meet Foreign Exchange Management Act regulation and guidelines released from time to time by the Reserve Bank of India, besides guarding against money laundering or terror financing. This means that NRIs seeking to transact via UPI platform in stipulated countries would not require any Indian mobile number. It will help international students, family living abroad, and local businesses as well. That wraps up the UPI transfer within India and for NRIs. Let's look further on how India taking UPI around the world. The success of UPI took the world by storm. In fact, several countries are trying to replicate the UPI settlement infrastructure. With this incredible technology, the Indian fintech industry is at the forefront of most of the developed countries. NPCI established the special payment arm, NPCI International Payment Limited, to internationalize the RuPay and UPI and facilitate the real-time bank account payout in India. NIPL inked the partnership with several countries such as the UAE, the US, the UK, Nepal, Bhutan, China, Japan, France and Singapore to launch Indian payment rails in their countries. This says that Indians will now be able to make payments through UPI in these countries. Speaking on the sidelines of the G20 Digital Economy Working Group meeting in Lucknow, Union Minister Ashwin Vaishnav said that India had signed MOUs with 13 countries that want to adopt the UPI interface for their digital payments, and that Singapore has completed its UPI integration. The global partnership have come through as the NIPL is forging the partnership with different countries to build a huge acceptance network for the RuPay and UPI, which will allow Indian travelers to make payments via these channels in their destination country of travel. NIPL was incorporated in April 2020 as a wholly owned subsidiary of National Payment Corporation of India, devoted for deployment of RuPay and UPI outside of India. These partnerships are significant milestone in the evolution of UPI payment system, as it expected to enable the hassle-free, low-value transaction and cross-border remittance. As UPI is evolving, let's see how UPI transforms the digital payment service of India. First, reducing the cash dependency. One of the primary impact of UPI on India's economy has been its pivotal role in promoting the digital payments and reducing the country's heavy reliance on cash transactions. This shift towards the digital payment has resulted in several positive outcomes. Firstly, it has forecasted the financial inclusion by bringing the huge number of people who had no bank account under the same umbrella, and also less cash reliance led to the less issues related to corruption. Every digital payment leaves a trail somewhere, therefore all payments can be tracked back. Second, empowering small businesses. UPI has played a transformative role in empowering small businesses and micro enterprises. Previously, these businesses faced challenges accepting the digital payments due to the high transaction cost and lack of infrastructure. However, UPI low-cost transaction and user-friendly nature have opened up the new venues for these small businesses to participate in the digital economy. And finally, encouraging financial innovations. UPI's introduction in the Indian financial ecosystem has fueled the wave of innovation, encouraging the growth of fintech startups. The availability of a UPI as a secure and reliable payment. Several fintech startups have leveraged the UPI to introduce various services, including digital lending, personal finance management, and more. We could all feel how critical digital transactions were during the pandemic. The whole country needed to opt for the cashless payment method. So, by understanding all this, can India really become a cashless country? Consider, yes, it is possible. And let us try to understand one example here. Let us say Indian government introduces own UPI connected payment wallet. Beam is an excellent mobile app, but it is not a wallet. NPCI should add a UPI wallet functionality to Beam. It means we will be able to store the money on the Beam app just like Paytm. This UPI wallet will be independent of any bank. We do not need any bank account for using the Beam UPI wallet, Imagine we send, receive payments even without any bank account. A tea seller on the roadside without any bank account, he only has an Aadhaar card. He can buy an Aadhaar verified SIM card. NPCI automatically create the UPI wallet accounts for the new mobile number. The rule is simple. If someone has an Aadhaar verified SIM, she will automatically get a UPI wallet with zero balance. This tea seller now install the B mobile app and send and receive the money. Can Indian government and NPCI create such simple option to send and receive money? This will not harm any national security because the government can always track the transaction using Aadhaar number associated with a UPI wallet account. Consider my UPI VPA is ABC at UPI. If someone sends money to this VPA, money will be received to my bank account because this VPA is linked with my bank account. Also consider the UPI wallet VPA is something like XYZ at UPI. So if someone sends money to this VPA, money will be received into my BHIM UPI wallet account. Only 3 things required for this: the Aadhaar card, the Aadhaar verified eSIM and a smartphone. But we have a catch here. Is India prepared for a cashless? Harvard Business School has conducted a study where they assessed the cost of using cash across 154 countries. The assessment was done from the perspective of the banks and the government on how much cost they are incurring. From the bank's perspective, the cost of maintaining ATMs was assessed. A point-based score was assigned based on the expense incurred in transporting the cash to ATMs and other ATM charges. Based on the cash usage, from the government's perspective, an average tax gap is calculated, which is an estimate of the proportion of money that should have gone to the government but went uncollected as it was a cash transaction. It doesn't mean that countries with a low cost of cash are closer to being cashless society. All the map indicate is that the cost of cash is in these countries are relatively lower compared to those of the rest. From this we can understand that the cost of cash varies significantly across the countries depending on the whose perspective we are analyzing, banks, consumers or government. That derives conclusion. UPI is the cornerstone of India's digital transformation and revolution, aiding the country to move into the future with a paperless economy, thereby curbing the money laundering activities and tax evasions. And cost of using the cash also made a note on how cashless looks like. Let's watch out for our UPI future in coming days. That's it we have for today. Thanks for watching. If you haven't subscribed to our channel yet, please consider subscribing. We'll see you in another video.